Have you ever wondered what it really feels like to have $1 million invested? Does life suddenly change? Or does it just bring new responsibilities and decisions? Today, we'll explore what reaching that milestone can mean in real life, in simple, practical terms. By the end of this video, you'll understand what $1 million invested can do, the benefits and challenges, and how to think about it realistically. We'll break it down step by step so you can see how your money may work for you and how to make smart choices once you reach this milestone. Hitting $1 million in investments is a big milestone, but it's not magic. It doesn't automatically make you wealthy or solve every financial problem. Instead, it changes how you can use your money, your decisions about risk, and how you plan for the future. Understanding the real effects can help you make smarter choices. 1. The feeling of reaching $1 million. Reaching $1 million invested can feel surreal. You may feel proud, relieved, or even a little anxious. Example, imagine logging into your brokerage account and seeing a 7-figure balance. It's exciting, but it can also be intimidating. You start thinking, am I doing the right thing? Can I preserve this wealth? What if the market crashes? It's normal to have mixed emotions. Even professional investors don't feel confident 100% of the time. Understanding that emotions are part of the process can help you make calmer decisions. 2. Understanding the true value. $1 million doesn't mean you can spend $1 million freely. Most people think of their investments as cash, but in reality, much of it is tied up in stocks, bonds, or other assets. Example, if you have $1 million in an index fund, it's growing over time. You could withdraw some money each year, but taking too much could reduce future growth. Many financial advisors suggest using a 4% withdrawal rate. At that rate, $1 million could generate $40,000 per year without significantly shrinking your balance. This highlights an important point. Reaching $1 million changes how you think about income versus net worth. Your investments can provide ongoing income, but careful planning is needed to ensure it lasts. 3. Taxes start to matter more. As your investments grow, taxes become a bigger factor. Capital gains taxes may apply when you sell stocks or funds. Dividend income may be taxable. Retirement accounts may have rules that affect withdrawals. Example, if your $1 million is split between taxable accounts and tax-advantaged accounts, understanding the tax implications can help you keep more money invested rather than paying unnecessary taxes. Even small mistakes, like selling the wrong asset at the wrong time, can cost thousands of dollars. Smart investors plan ahead and may work with a tax advisor to maximize efficiency. Have you ever wondered how taxes can change your actual take-home investment income? Comment below if this is something you think about or worry about. 4. The power of compounding. One of the most exciting things about reaching $1 million invested is the power of compounding. Compounding is essentially money making money, and at 7 figures, even modest returns can add up quickly over time. Let's break it down with a simple example. Suppose your $1 million portfolio earns an average of 7% per year. That 7% translates into $70,000 in growth annually, not counting any withdrawals you might take. Over time, those gains don't just sit there. If you reinvest them, they start earning returns themselves. This creates a snowball effect where your money keeps working for you. If you continue this pattern over 10 years, your $1 million could grow to roughly $2 million, depending on market performance. That's the magic of compounding. It amplifies your growth potential the longer you stay invested. Here's another way to think about it. The bigger your portfolio, the more each percentage point of growth matters. On a $100,000 portfolio, a 7% return is $7,000. On $1 million, it's $70,000. The scale makes a big difference. This doesn't mean you'll become a millionaire overnight or that returns are guaranteed. Markets fluctuate, and some years may be negative. But by staying disciplined, reinvesting earnings, and avoiding emotional decisions, compounding can significantly accelerate wealth growth. The key point is this. Reaching $1 million doesn't just give you a milestone, it gives you leverage. Your money now works harder for you than ever before, creating more opportunities to grow your wealth faster and giving you the flexibility to reach financial goals that may have seemed out of reach before. 5. Risk management becomes crucial. With $1 million invested, protecting your wealth becomes as important as growing it. Diversification, spread money across stocks, bonds, and other assets. Emergency fund, keep cash to cover unexpected expenses so you don't have to sell investments at a loss. Portfolio review, Adjust allocations periodically to match risk tolerance. Example, if $1 million is heavily concentrated in tech stocks and that sector drops, your portfolio could fall hundreds of thousands quickly. Balanced investments help protect against large swings. 6. Lifestyle choices may change. Having $1 million invested can give you more freedom. You might choose to work less or retire earlier. You could fund children's education, buy a home, or travel. But lifestyle changes also bring new decisions about spending and saving. Example, retiring early might sound appealing, but it requires careful planning to ensure your portfolio lasts decades. Unexpected expenses or market downturns can have a bigger impact if withdrawals are large. 7. Psychological effects of wealth. Reaching $1 million can affect your mindset. Some people feel confident and secure. Others may feel anxious about losing it. Social pressures can influence spending and investment decisions. Example, friends or family may ask for financial help. You might feel pressure to keep up with lifestyles of wealthier peers. Recognizing these psychological effects can help you make rational decisions rather than emotional ones. 8. Flexibility and opportunities. Having $1 million invested isn't just a number, it's a tool that opens doors to opportunities you might not have had before. One of the biggest advantages is flexibility. With a larger portfolio, you can explore new options while still keeping your long-term goals intact. For example, you might consider investing in new assets like real estate, startups, or small businesses. These opportunities can offer higher returns than traditional stocks or bonds, but they usually come with higher risk. The beauty of having $1 million invested is that you can allocate a small portion of your portfolio to these ventures without jeopardizing your overall financial security. Your larger portfolio acts as a cushion, helping you take calculated risks. Another possibility is philanthropy. Giving back to causes you care about can be deeply fulfilling, and it may come with potential tax benefits depending on your country's rules. Even small charitable investments can make a real difference and allow you to use your wealth to create positive impact. You can also make strategic withdrawals for personal goals, like buying a home, funding education, or traveling, without derailing your long-term investment plan. 9. Mistakes to avoid at $1 million. Even with a large portfolio, mistakes can be costly. Ignoring risk, overconfidence can lead to risky bets that endanger your wealth. Overspending, treating the portfolio as cash, can reduce growth and future income. Neglecting taxes, poor tax planning can erode returns. Emotional investing, panic. Selling during market drops locks and losses. Being disciplined and planning ahead is crucial. Even experienced investors make mistakes if they aren't mindful. 10. Planning for the long term. Reaching $1 million is not the finish line, it's a milestone. Review your goals, retirement, lifestyle, legacy, philanthropy. Adjust portfolio allocation as life changes. Reinvest gains to continue growing wealth. If you found this helpful, give it a thumbs up. Subscribe for more clear, simple investing advice. And check out the next video where we break down how to grow from $100,000 to $1 million in a realistic step-by-step way.